Business Entities Overview. I'd like to just work through a tax rate example with you that shows you the difference between a C corporation and an S corporation. I'm not going to try to do one for a sole proprietor and an LLC and a partnership and all that other. I just want to show you a comparison of these two. We're going to do a simple comparison to begin with, and then we're going to do a couple of permutations on that. You have this in your PowerPoint slide deck, so go ahead and get it out and let's turn to Excel. So let's work through an overall tax rate example. Amy's trying to decide whether she wants to form as a C corporation or an S corporation, and she's going to do this by looking at some scenarios and calculating the tax both as a C corp and as an S corp. And remember that the tax method is only one thing that you should consider when choosing how to form your business. That is not the only thing you should consider. And we want to project this as both a C corporation and as an S corporation. And the first thing that we have is business taxable income is $400,000, and that's not going to change. For the corporate tax rate, as a C corporation, it's 21%. As an S corporation, there is no tax. And so the corporate income tax for the C corporation is $84,000, and it is zero, of course, for the S corporation. And then she's going to distribute out the remaining income. So if she is a C corporation, she will have $316,000 left to distribute to herself. And if it is an S corporation, she will have $400,000 to distribute to herself. And so then we're going to figure out, well, what happens next? Well, if this is a C corporation, that money comes into her as a dividend, and she is going to be charged a 23.8% tax rate on that dividend. And then the personal taxable income that they have, if she's operating as a C corporation, it is just her husband's $800,000 of taxable income. But if it is an S corporation, then the $400,000 is also ordinary income. So although they would have, both of these would be taxable income, this is not tax preference income, and the $316,000 is tax preference income. So I'm going to keep them separate for right now. And this is after itemized deductions and everything else, just to simplify it. Although the problem says that their marginal tax rate is 37%, and that's true, I don't want to just use a flat tax. Let's actually figure out what the tax is. So there are two pieces to calculating a tax. The first piece is going to be, what is the flat amount? If you look at how this is written in a tax table, it's going to say that if you are married filing jointly in 2022 and you have over $647,850 of income, then the tax is $174,253.50 plus 37% of the amount over $647,850. So first of all, I just want to make a note here that this is 2022 tax year. And if you're looking at this video and you're working on a different tax year, 2021, 2023, 2024, note that the method is the same. You're just going to have to come up with a different amount. I call the 174,254 the flat amount in that formula, and I call that the bend point. So when we calculate our personal income tax, it's going to be made up of two pieces. First of all, we're going to have that tax preference income times the tax preference rate. Second of all, we are going to have the individual income tax rate, and I said that that is made up of the 174,254 plus the amount over the bend point, the 647,850, times that marginal tax rate of 37%. And that gives us an individual income tax of $305,757. Now, what is our average tax rate? That is going to be the total amount of tax divided by total taxable income. And it gives us an average personal rate of 27.4%, which should make sense to everybody. We know that that's always going to be between the two rates, right? It's going to be between the lowest part that our income is taxed at and the highest amount that our income is taxed at. How does that work if she is an S corporation? Well, they don't have a tax preference item in this case. All they have is that formula. So we know that it's going to be the 174,253 plus the amount of taxable income over the 647,850 times the 37%. So that is their individual income tax if she is formed as an S corporation. And that gives us a marginal tax rate of 31.5%. It's going to be lower than 37% because not every dollar is taxed at the marginal tax rate. Okay, so far so good. It looks like she's getting taxed more on the S corporation, but wait, there's more. Let's start out by seeing how much is the total income that Amy and her husband have to deal with. And in both cases, they have $1.2 million, $800,000 from his salary and $400,000 from the corporation. What is the total amount of tax that they paid overall? Well, in this case, they paid $305,757 personal tax, and they paid $84,000 in corporate tax. Here, they just paid the $378,549. So then the next question is, what is their average tax rate on everything? The average tax rate, if she's organized as a C corporation, is going to be the total tax divided by their total income of $1.2 million, and that is 32.5%. As an S corporation, it's slightly lower than that. It is going to be 31.5%. So maybe not a whole lot of difference if she's making a modest amount of taxable business income. It might not matter a whole lot which way she organizes. Let's go to the second page and look at some other assumptions. What happens if she has a loss in the first year of business? What happens then? We can just take that assumption and pop it in here. As a C corporation, she'll have no tax because she has no taxable income. As an S corporation, she'll also have no tax because there never is a tax. There is nothing to pass through. There's no dividend income. Because there's no dividend income, we don't need to worry about a dividend tax rate. And her personal tax is her husband's salary, in this case, $800,000. The marginal tax rate is still 37%. Our flat and bend points are still in the same place. I'm just going to copy those over. So we can just copy this formula across. And their income tax is going to be $235.49, which is an average personal rate of 28.8%. And again, just taking a look at those formulas, we're just taking the 174,254 plus the amount of taxable income over that bend point times the marginal tax rate. And our average personal rate is the tax divided by total income. Our total income in this case is not $800,000. It's not $1.2 million. There is a loss, and Amy is the sole shareholder in the C corporation. That loss has to be covered by somebody. So effectively, she and her husband have a total income of $750,000 that they can work with, right? Because they have to cover that loss. The total tax is going to be just the $235.49, and that means that their marginal tax rate in this case is 30.7%. What happens in this situation if they are an S corporation? Well, one of the benefits of being an S corporation is that that loss passes through and can be used to offset other income. So that $50,000 loss passes through for taxable purposes. They are still in a 37% marginal tax bracket. The flat and bend points remain the same. We can just copy these formulas over, and you can see that their individual income tax is $212,049, and that is a marginal rate of 28.3%. Again, not a whole lot different, but what about down here? Well, they still have $750,000 of effective income, $800,000 from her husband's salary, plus they have to cover the losses on the S corporation. And so their total tax is a little bit lower, their marginal tax rate is going to be a little bit lower as well, 28.3%. So it is looking a little bit better. Okay, let's take a look at another situation. What would happen if they had losses of a lot of money? Okay, so let's come down and take a look at their tax, their personal tax. They still have the $800,000 salary. They are still in the 37% tax bracket. That bend point has still not changed at all. So these formulas can be copied down and come over here. And then we need to take a look at their income. They don't actually have $750,000 or $800,000 or $1.2 million this year. He earned $800,000 and almost all of it has to go to cover the losses in that corporation. So they're going to end up effectively with only $100,000 of income. This is a gross simplification. They might borrow money to cover that amount. That may be a book loss that doesn't have to be paid for out of pocket, but we're just kind of trying to keep apples and oranges the same. Their total tax, of course, is the $230,539, and when we copy this formula across, we can see that their tax was actually 230.5% of their usable income for the year. Kind of crazy, huh? What happens if they are an S corporation? Well, in 2022, we have another limit, and that other limit is the excess business loss limitation. It is capped at $524,000 for a married couple. So they can write off some of those losses, but it's limited to $524,000 in 2022, and that is an amount that is indexed for inflation. In this case, they're no longer in the 37% marginal tax rate. For that matter, they've fallen down to the 24% tax rate. And the formula for that is $30,427 plus 24% of the amount over $178,150. So we can put those bend points and that flat amount down there. We can bring our two formulas across here, and they have a tax liability of $53,911, which is 19.5% average personal tax rate. But they still only have $100,000 to work with because this scenario is the same as the last one. And now I can copy these formulas across, and their marginal tax rate, or their total average tax rate, this time is 53.9%, which is substantially lower than that 230.5%. Okay, this is just a series of examples that lets you show how to analyze this. If you were analyzing it as an S corporation versus a partnership, or as an S corporation versus a sole proprietorship, you could add additional details in here. How much salaries are you going to pay? What is going to be the QBI benefit of each type of scenario? You can see that this can get very complex very quickly, but I just wanted to run through this scenario for you and show you an analysis of how the taxes might compare from a C corporation to an S corporation. And that's the end of this chapter. If you have any questions, get in touch, and I'll see you next time.